Welcome to SALTovation. The SALTovation Show is a podcast series featuring the leading voices in SALT, where we talk about the issues and strategies to help you make sense of state and local tax.
Didn't they pull them all down from the website?
They pulled all the FYIs down, yes, many years ago.
The FYIs
they
are still there.
No, they redid them and took everything down and then put some things back up. So everything that's historical is no longer accessible. It's somewhere, but it's not out for public consumption. So there definitely was a sanitation program that went through under the premise that some things aren't current anymore. It's probably not valid. We have to look at everything again. So I don't know if there's a way to caveat that now, because I wasn't the one who did it. I just remember we're like, what? We have that. We like that. We want that out there. And because you caveat and say this is good for now. I don't know what they did, but they pulled a bunch of stuff down. This is many years ago, before COVID even. But it was an uproar in practitioners because this helps us get solace around this unique position to at least compare and contrast. Yeah.
The way they got to them in Chicago was a FOIA request, a Freedom of Information Act request. So give us everything. And then they didn't. So then they sued them to give them everything.
Interesting.
But then you have to start doing stuff like redacting because, we would do these for our taxpayers or our clients, and we didn't know that they were going to be published because they weren't. So then you've got to go back and make sure there's nothing that's revealing.
Right. And that's time. That's man hours. AI can't do all of that.
No. So that's why the city didn't want to publish them. So they didn't want to have to go back.
The manpower. And they don't have it. They're a government. They don't have the resources to have that kind of bandwidth or time or expertise necessarily. Yeah.
But to not offer the service of getting one of those rulings is asinine because, let's be real. Most of the time, they're not taxpayer friendly, right? Like the decisions, not most of the time, but a lot of the time they are confirming taxability or confirming sourcing issues that aren't so favorable. And so, you would think the department would want to have that on their books to get more taxpayers to comply.
I would think that's why, we've gotten them, we've always got them put back in the budget, but we've definitely had some consternation over the years about them saying we don't want to do them anymore. And advocating for not doing them, and practitioners have an uproar. But, it depends on who knows. Like, taxpayers don't know this. Like, in so much, taxpayers know nothing, right? We know because we look, but they're not tracking to that. So they assume the government's right or whatever, So there's a lot. I think a lot of people even handle audits without calling an expert and think they can self-serve, and they misstep, to be honest, and do things they probably shouldn't have done if they just spoke to counsel at the outset. So,
yeah. And with those, most of the time when I have clients that want some sort of ruling on an issue, like I did one in Mississippi on landscaping services, or in California and the taxability of a subcontractor and whether that's a lease or a service. They want those rulings because they want their competitors to be treated the same way that they are.
Yes.
Sometimes it's not like they don't want to pay the tax. They just don't want to pay the tax if their biggest competitor's not paying the tax. They want this to all be public. So
good point. It really does create parity, and there is a lot of that disparity, which becomes problematic for business.
Yeah, and that's why it's so important they be published.
So this year at IPT, you taught the top 10 case class, which is generally pretty popular. So any case in particular of those top 10 that really sticks out, that you liked or didn't like?
Yeah. I've spoken for the income tax committee pretty much every year, but I never done the top 10 cases. I was kind of shocked, how big that audience was. Every single chair had a button in it pretty much. But I also ended up I did a last minute presentation on taxability of digital services as well with my former colleague, Chris Lutz. But anyway, that one was fun because it was a good audience. And I talked about Tractor Supply already. I think that's a big one for taxpayers to be aware of. But another one that I think is really important is the VBF case out of Ohio. It's a gross receipts tax case dealing with sourcing. So we had several cases in Ohio about sourcing of services. This is sourcing of sales of TPP in the ultimate destination. Because you may remember, I think it was 2018 maybe, we had the Greenscapes decision, which the court ruled, I think it was the Ohio Supreme Court ruled, that you have to look at the ultimate destination of the goods and where do they end up. And it was sort of surprising for some taxpayers because like if you have all indicia of ownership changing in another state, like we had a case where supplier of food goods located in New Mexico, they ship it to Ohio because there's distribution centers there, but then ultimately it ends up outside the state. And we could show that, and in our case, a lot of these customers were picking them up in their own trucks in New Mexico, taking ownership, taking control, taking liability. And yes, they do take them to Ohio, but really all indicia of ownership was transferring in New Mexico. And we ended up just settling that case because of the bad decision that came out in Greenscapes. So fast forward, VVF, this case that came out last year, it was a taxpayer win because instead of Greenscapes, where, of course, the ultimate destination is what the statute says, the state was really trying to have their cake and eat it too, because for VVF, again, I think they sell food, but they were located in Kansas. They would ship it to a distribution center in Ohio and then store it there for some period of time, and then ultimately would ship it outside the state to their customers. And Ohio said, no, we get that too. And it's like, no. You can't get the ultimate destination when it favors you, but not get the ultimate destination here, which is outside of Ohio. And, ultimately this came down to, could they show with their books and records that these shipments actually end up outside the state? I've had quite a few audits in Ohio on this issue, different variations of these fact patterns. But I think it's an important takeaway for folks that may not assume, you may assume that if the customer's picking it up and they're taking it, outside of Ohio, that it's not going to be an Ohio sale, but it is for CAT purposes. So that's where it lands. And you can't prove, that's the important part. You have to be able to prove where it ends up ultimately.
It's interesting. And that's for CAT, is that for CAT tax purposes?
Yeah, it's for the commercial activity tax. Correct.
Yeah.
Which
is really a gross receipts tax. So where does the receipt end up? Yep.
Exactly. And where the receipt ends up matters for nexus purposes, because maybe you don't have physical presence in Ohio, but you exceed the, $500,000 receipts threshold for nexus. And you weren't even thinking about that because you weren't sourcing the receipts to Ohio because, you thought you didn't know that they ended up in Ohio, or you thought they weren't ending up in Ohio.
Correct.
But, and it really kind of comes down to like what's on the invoice, what's on the bill of lading. If they're showing an Ohio address, the state's going to assume that's an Ohio delivery unless you can prove otherwise.
Yep.
Well, and that's also part of, some of the other states that have kind of that customers concept related to income tax sourcing of, is there kind of those like look through provisions on like ultimate benefit of service and whatnot. So it is one of those components of, it's like, well, it just might not exist. Right? Like I remember when I first started, we had a client when I was at KPMG that sold to Best Buy. They like shipped a bunch of stuff to Best Buy in Minnesota, and Minnesota has a 9.8% income tax rate. So it's really high, but it's like, they know that like, yeah, Best Buy received it in Minnesota, but it's going to all of the other stores throughout the country. So from a sourcing perspective, is it really Minnesota or is it really where it's going otherwise? And it can be materially significant, and it kind of shows up in all of those aspects, right? The gross receipts tax, we've got income tax sourcing, even kind of that multiple points of use concept when you're talking about like software for sales tax. And can those records support whatever that position is?
Yeah, I mean, the Oracle case out of Massachusetts gave us the opportunity to do more apportionment when it comes to sales tax and determining the location of the use. I mean, I'm always curious from a practicality standpoint, like, what do you guys advise your clients when it comes to a state that maybe doesn't necessarily have a statute that allows for multiple points of use, but, you think you could back it up with your books and records? My answer, and I'm curious what yours is like, just take a reasonable position that you could verify, even if the statute doesn't necessarily provide for it. From a constitutional standpoint, it probably should. I don't know what your thoughts
agree.
are.
I think it's implicit. No, I think sourcing's implicit in any statute. You can only tax things in your boundaries. You don't get to tax anything out of your boundaries. So just because an invoice says something that may be an inaccurate reflection of what happened, I think especially with shared service centers and large contracts where you bill one place and then they distribute everywhere, is a huge problem for large taxpayers, because they want to centralize AP, AR, all the things into the shared services center and buy on behalf of, get bulk discounts, all the good things. And if they don't think through what state they're located in, you get bonked with tax. So the only way it's good in software is you could invoice in California. So everybody should have a shared service in California, because even Colorado, we tax at the city level when it comes to software. So I think it is really a problem. People don't think about it. Yeah, I really do think a lot of business doesn't realize. I had a client Mara and I had a client that did work with like the Gap, and the Gap is in San Fran HQ, but they have stores everywhere. So whatever they were doing was going to be across the nation. It wasn't a state specific thing. So what we found in California was they did have the right to distribute based on the use. And we're like, well, how do you decide what that is? Right. So we did a census. That's what we did. We're like, we're going to redistribute this income based on the Census of America, because we know that's where the stores are and that's where the buyers are going to be, even though we're billing this service to the state of California. So, and you're allowed to do that within some reason, but it wasn't like clear. We sent one giant invoice to California. And so is that really a California sale? So it was a kerfuffle, because I think a lot of people administratively don't see those nuances. They just simplify their billing. And especially now with e-billing, where is anything going anywhere? I mean, honestly, do you even need an address? You need an email to make sure someone pays your bill. So that's kind of problematic from a sourcing perspective in general. Yeah, it's simple. Get the bill, give me a credit card. Yeah.
Yeah, so many of the waterfall sourcing provisions are based on like billing address that don't even really make sense anymore. Yeah, I mean the other caveat to this too is, so let's say you know the destination, like, but you don't know it at the time of sale. Does that matter? And that was what the department argued. One of their positions in that VDF case that I was just mentioning with the Ohio CAD is their position was, even though you guys can prove now that this stuff didn't end up in Ohio, you didn't know it at the time of sale because it would come into Ohio, sit in a distribution center, and then go out. And the court laughed at that. They're like, that's ridiculous. Like, ultimately, the reality of the situation should matter more than it's like a form over substance. But
yeah.
Well, so then I want to kind of circle back to what we kind of briefly touched on. I almost said this morning. Anyway, but as kind of what kicked off, the idea of having you on the podcast is you had reached out to Judy with some of the Colorado local stuff, and Judy's actively engaged in simplifying our system, and it's it's a marathon, not a sprint. So she's working really hard. There's a lot of
meetings next week, task force meetings, trying to talk about SUTs and how well it is or isn't working, and why we don't have mass adoption and all the things.
So, Sam, as a non-Coloradan, how do you explain or work through some of the nuances our state has when we, as in-state practitioners, have a hard enough time explaining our nuances to in-state businesses? What's that like?
It's a challenge. And yeah, as I mentioned, I did come to Judy because I think of her in Colorado going hand in hand for the locals. But yeah, I've kind of had it shift the way that I advise taxpayers. Like historically, if I'm we do a lot of these like multi-state taxability nexus, where should you be filing? Do you do a voluntary disclosure? Do you register? I love doing those projects. I love the practical side of them. But historically with Colorado, assuming they're taxable in the state and the localities, which I know can vary, especially with something like SAS or otherwise, but we would advise them just register in the state and maybe some of like the biggest cities. So like the Denvers, the commerce cities of the world, maybe just register there, do a voluntary disclosure and don't worry about the rest. And that's bad. That's bad guidance now. And so, now with most cities adopting the model ordinance and participating in SUDs, it's a whole revamp. I've told Judy that I represent several remote sellers that have gotten kind of hammered by these localities. With this one remote seller, they're a purely remote seller, but they are a bigger company. So it's enough for these cities to care about them. We did voluntary disclosures in a couple of the big cities, and those were fine. And then we just started to get like little nibbles from some of the others. And now a private audit firm is come and on behalf of several other cities. And my question for Judy was like, if I give a mouse a cookie, will it ask for a glass of milk? Like if we, because the amount of liability in these cities isn't much, it's a couple $1,000, which isn't going to break the bank. But I just, typically, and I work in the unclaimed property space as well, you'll sign some sort of like NDA or, non-solicitation, which bars these third-party audit firms from soliciting more cities. Like, fine, we'll do these, but no more. And these firms, as far as I've seen, won't agree to something like that. So what allows us to cut this off? Can't they just keep coming back? And I think the answer is yes. Practically, maybe they don't. But that's kind of remains to be seen. What I'll also say is, like, strategically, what do I advise my clients? I pay very close attention to when did they adopt the model ordinance, which for those of you that maybe aren't as familiar, that means that you're pretty much saying if you're subject to tax at the state level, if you have over 100,000 in sales at the state level, you're subject to tax in localities, which is unconstitutional. I mean, I want to challenge that. I would love someone to let me challenge that. Doesn't make sense.
Yep.
Because you could have $1 of sales in Commerce City and 100,000 at the state level and be subject to tax in Commerce City, even though you have some presence. But what I advise clients is pay attention to those dates. So when did they adopt the model ordinance? When did they begin participating in SUTs? If they're trying to go back before either of those dates, I'm fighting it. I mean, I'm not going to fight it where the amount of paying me exceeds the tax, but I'm going to fight it because I don't think they have any sort of legal basis to require collection for assuming they're a remote seller. Is that consistent with what you think, Judy?
Yes, but the fight is what the question is. So it's so challenging. And now what I've sort of felt like is you capitulate. Well, what I have found is software collects the tax without the taxpayer knowing it. So they have the tax and didn't realize it. So they give it to the state in error. That's a problem because you're voluntarily collecting it because you didn't know what sales tax meant at the destination. So that's a problem between the experience of SALTovation and you as a business. There's a huge disconnect there. And then there's the SUT system. So you can collect it and remit it. And why not? Because you don't want to get caught with that holding it. So, but it all depends on your facts. And then the look backs and then filing, the future filing is really problematic depending on your facts. So if you're a remote seller and you can, and you've got the capacity because you're already collecting tax all the other places, what is it to add a few more and then go into SUT to get activated? And now there's no license fee. There used to be there is license fee if you're located. Some cities have dropped the license fee, but I think the computation was of several $1,000s if you license in every city. So it's like 70 plus statutory cities have licenses. So they're 10, 15, 20, $175. So they're not insignificant per year for the privilege of having a sales tax license to give them $5, which is why people don't do it. So we have a big problem here in terms of that, and it always is facts and circumstances based. So like, what is the path of least resistance? How much legal advocacy do you want to fight in the city of Tacona, 10,000 humans, and you sell them nothing, So, and then what's the firepower of some of these cities? Some of our cities are more assertive for sure, and then you've got these groups that do the audits on behalf of all. Yeah, we're actually talking about this trigger audit issue whereby these third-party auditors, they have the right to audit these small cities. They don't have the bandwidth internally to do it, so they think it's more efficient to have a third party do it, and they can do it on behalf. And so they do have some kind of NDA, like non-disclosure, but they still know the information. So why wouldn't they tell another city, like, we should go after this taxpayer because there's a lot of money to be had by so-and-so, right? So I think there's a little bit of that, even just the fact of the internet market in general, the front door delivery. So yeah, I can hope before the end of my career, we have some parity, but it's been a marathon a lot. I really thought this is so simple because everyone will get more money if you make it easy.
Right.
But everybody's been holding firm to their rules that they have power and constitutional supremacy. And I'm like, but you're not making the taxpayer any happier. And this is a voluntary system. You are getting your revenue from taxpayers. Be nicer to them. And they are nice individually to them, but it's like, just make it easy because people don't need hard stuff. And everyone will win, but it doesn't work that way.
Yeah, I got yelled at once for saying that SUTs make things easier, but I'm not sure. I'm not doing the returns on the back end. But did you see that?
It's clunky.
Did you see that the city of Lakewood and Wayfair settled their case? It was just in the news
Oh, I
today.
didn't. Did you just find? Oh,
Yeah.
I didn't see that yet.
Yeah, I
Really?
almost forgot to. Yes. So speaking of settlements, and speaking of, this is a good marriage between the two concepts. And the settlement agreement is not public, so I don't know exactly what they agreed to, and if we'll find out. But that case was. I don't think it was going to give us like a complete answer to whether what the cities are doing with the model ordinance is constitutional, because like some of the periods were before the model ordinance, I think, or most of the periods. But,
and there's physical present with delivery in their own vehicles. So there was a whole different set of issues as opposed to a true remote seller delivering via common carrier. So I think factually it wasn't the same as, maybe a traditional remote seller that can actually deliver your goods in a box, right? Wayfair is delivering big pieces of furniture and so forth. So so I think it isn't as factually relevant, but it's definitely been something we've been following as a task force. And of course, now that it's settled, we have no idea.
Yeah. So. I mean, I feel like whenever I bring this up with people, folks are like, oh, well, there's that case pending. I'm like, I don't know if it's really going to give us the resolution that we want. And obviously it didn't. It settled. So we'll
and I would imagine Lake was even, because Lake was arguing a retroactive nexus, but like I said, I don't think the facts were such that they're a remote seller in the same framework that we're thinking these ordinances, these model ordinances. Yeah, and then those have been adopted over a varied period of years. For the last 10 years, this has been going on. So when it becomes effective, and then SUTs isn't even ready with every single city yet. So how can it be constitutional if every city's not in it? Like, right, we still have like 2 cities sitting out there. So I do struggle with enforcement and how you marry that. And then it ends up being de minimis. So what do you do? Even if you have a $200,000 settlement, do you roll up the lawyer to go to court on that? Like, right? That's where you get this thing.
Yeah. And that's where, to me, like these third-party audit firms know that you're kind of stuck between a rock and a hard place. Like, of course, we're not just going to roll over, but we're not going to litigate over $5,000. And I have been able to like cut some breaks in a couple of these cities where I say, look, and I know that it's not right how far you're going back. Like, whether it's you hadn't adopted the model ordinance, or even if you did, there's a period of time it takes to get in compliance. Can we split this down the middle, right? Can we cut the baby? And for the most part, they've been willing to work with me. And I don't know. I'm curious whether have you engaged in any sort of like settlement activities?
Oh yeah, I just settled $500,000 down to 175, which I thought should have been. I really wish it was zero. Facts didn't lend themselves exactly in my favor, but it was just very disheartening. And if we had more cities like that, like imagine how cumbersome that'd be on a good faith taxpayer that's trying to do the right thing and being asked to do an onerous thing. And then we didn't even get to the, speaking of which, pivoting to, we didn't talk about the leveling the playing field because we didn't even add that for the Chicago thing. So as you compare our state to your state with your crazy state, Chicago, no, I shouldn't say crazy, but the Chicago entity, what do you think about that? Do you use that as an example? I suspect that's a good way to give it a comparison to Illinoisans.
Yeah, I mean, leveling the playing field is so complicated to enforce. I mean, the idea is that with Illinois, you had your 6.25% state rate that historically you only had to pay that if you didn't have any sort of physical presence in the state. A few years ago, they adopted leveling the playing field to try to make it so if you were a remote seller and an in-state seller, you're on leveling the playing field. But there was this sort of loophole where if you just had some physical presence in the state, then you were still only subject to that 6.25%. Like you have a remote employee, you're only subject to the 6.25%. Versus if you were a pure remote seller, then you were subject to both the state and the local, and having to deal with destination sourcing for those sales versus origin sourcing for those in-state businesses. It's a mess. And, there are a couple pending cases as to whether it's constitutional. I think they'll probably succeed. Both that I'm aware of are at the Texas Tribunal. One of them is our case, and one of them is another case. I do think this is an unconstitutional law, but there's actually pending legislation right now that's I think currently with the governor for his signature, that, to my understanding, would get rid of the kind of the wonky exception that I mentioned. If you've just got like a little bit of physical presence, but you're not an in-state business or remote seller, that you only have to pay the 6.25%. I haven't really reviewed it all that thoroughly yet, but it's looking like that maybe there will be some more consistency amongst these different fact patterns. But yeah, it's a mess. If you're a remote seller, you're having to figure out destination sourcing, which maybe is not that complicated, but it certainly can be. If you're an in-state seller, the origin, where's shipping from? It's a mess for in-state and out-of-state.
Well, thinking about, a lot of people drop ship from foreign markets into the customer, so you don't always house everything in your warehouse necessarily, because you just don't. So yeah, I think that's problematic at best. And even thinking about Amazon, not everything is sourced from the local warehouse, right? Sometimes they might just say, we can't get it. We don't have enough. It's already fulfilled. So we're going to have to ship it from Louisiana. So how the heck is anyone supposed to track that stuff? Yeah, I think, once again, it goes to origination, destination, all that stuff, which is riding up on your horse, is not the case anymore. And a lot of our laws need to be rethought in terms of the Wayfair. But we're not there yet.
Yeah. I mean, I think when a state needs a flow chart, which the state of Illinois does in order to decipher its law, that's probably a sign that maybe it violates due process because it's so cumbersome to use.
Oh my God, I thought about that. It's a good point.
I all the time I go to that flow chart. It's confusing as heck. And
you have to. Yeah, totally. Yeah.
I don't think the department likes the law either, but we're stuck with the setup of the retailer's occupation tax, the fact that this is a tax on the retailer as opposed to your traditional sales tax, that they had to figure out a way to work within that context to create a local sourcing. And yeah, as a result, we have this monstrous sourcing for both remote and in-state sellers.
So funny story. I was just in Michigan. I've never been to I've been in Lake Michigan, Chicago, but I have family that lives off Lake Huron now. And I was, of course, I got to look at the sales tax stuff like more tightly now that I'm there. And, they haven't changed their sales tax since 1996. It's been 6.25% or whatever forever. It has to be voted in. There's no local taxes. And I thought, why is it that Michigan has not changed their law in like 28 years and all our other states are going crazy, wonky? Indiana has one rate. I mean, why can't we see more of that? And then they disperse the, based on population or something, you know what I mean? So why do we have all these crazy little jurisdictional problems? And I get they want autonomy and they have to pay for their services and they should get it based on their population needs, but also certain basic services are just a necessity. So it is challenging to deal with that, and how each state kind of approaches it is so different, which of course is why we have a career.
Yeah, if I were a state, I would do more Texas way, broadening the base, taxing more services, and not increasing the rate.
Or South Dakota. Do you know they tax massages and CPA services? They don't tax legal services, by the way. Yeah, I was at a firm that had a very big office in South Dakota. I never cared about South Dakota until obviously I had some audits in South Dakota, dealt with clients in South Dakota. And I thought, oh my gosh, this is a very interesting tax structure compared to a lot of other states. Yeah, and I mean, massages, like, you got to be kidding me. So, like, all services are taxable, but the lawyers were smart enough to advocate for not having legal services taxable, but the CPAs were not.
Yeah. I don't know why states do it some of these ways. They think that the taxpayers will view it more favorably one way or the other. And
yes,
as a result,
too political and not always beneficial to taxpayers voluntarily complying. Yeah.
Agreed.
Well, yeah, I think then on that note, Sam, thank you so much for your time, your kind of collaboration, your partnership with us. Yeah, we really appreciate having you here.
I have to somehow beat Jordan's record of 2 appearances, though, so we'll have to do this.
All right, we'll work on that.
All right, let's do it. Well, yeah, when your leveling the playing field case comes back, or comes out, we'll have you back and you can talk through that. You can give us a little straight from the horse's mouth.
Yeah,
so
exactly.
That is another episode of SALTovation. Till next time.
This podcast is for educational purposes only and is not intended, nor should it be relied upon as legal, tax, accounting, or investment advice. You should consult with a competent professional to discuss specifics of your situation and the applicability of the information presented.